Hi, everyone. How's everyone doing today? Stephen Oliveira, all you warriors out there, and the crew. There's Ryan. How are you, buddy?
All good, mate. Good weekend?
Yeah, great college football, some good NFL games, and had a little rain here to dampen down the fires. So
it's going to be a tough 4 years being an Arizona Cardinals fan, I can tell you right now.
Yeah, they're crummy, huh?
We just spent a lot of money on a very small quarterback, so for many years. Anyway, good morning, Dale. Good morning, Ryan. Good morning, rest of the team.
So we got follow through, guys. With Euro, do you guys think that maybe some setbacks by Russia are playing into a little bit of Euro strength?
Yeah, definitely. That's one of the reasons this morning. I don't think that's going to last very long. We're already getting headlines dropping that Putin may be reviewing the grain deal. They're going to continue with the offensive, so on and so forth. I think it's a little indication of what we might get if we actually finally get any decent news out of that situation. But definitely part of the reason for it.
I mean, that's a pretty big. Ukraine took over a pretty big
swath of land.
Yeah. I wanted to say area, but yeah, it was a big win for Ukraine over the weekend, right?
Yeah, 700 miles, 1,000 miles, full retreat. They actually showed Russian helicopters firing upon deserting troops.
Yeah, but now their energy and electricity infrastructure, water's getting knocked out by long-range strikes. So it's never.
Yeah.
Yeah. No flag waving yet.
I mean, even
won the battle, but not the war.
Yeah, the Hawks are. I think the danger is he gets desperate and looks bad on the battlefield. That guys like Kissinger and who did I speak to? Harold Milgram said that he does believe in de-escalating by escalating first. So, he still could use like a small tactical nuke to get people to, the West to shiver and cower. That would do it.
Exactly what I said last night when I was putting up the headlines in the newsroom on our chat room. Does this mean a de-escalation, or does it mean he's going to get desperate because he's getting his embarrassingly getting his ass kicked? Is he going to step it up?
Yeah, and the Hawks are on him too. I mean, the Russian Hawks are very angry with him that I think he was celebrating a big Ferris wheel in some festival while his troops are getting massacred.
Well, that's the other side. There's been a bit of dissent. Again, I put in a thread in the newsroom of some snippets of Russian media, like chat show hosts and things like that, where, there's people openly questioning what he's doing. And apparently, take this with a pinch of salt, there's 18 deputy governors in regions in Russia and what was the other place? St. Petersburg, who have written an opposition to the war or to Putin and his actions. So, there definitely seems like there's dissent growing in Russia. And if that snowballs and he has to take note of it, that's when we might get near the end.
And you have to remember how difficult it is to be a public dissenter in a country like Russia. It's not like Sweden,
Yeah. I don't think they'll remain in office or on the planet for that much longer. It's not funny.
Lots of windows.
Yeah. Gold.
But it is what it is.
Huh?
I'm saying, but for the euro, it is what it is. We got the bounce, we got the move up to 102. The big figure held on. We saw prior resistance there early in August from the breakdown. As much as we see the euro rally, it just even now it can't hold the break. But I think we're, Stel's been saying it as well. We're probably a bit more in dip buy mode than rally sell right now.
Yeah, I don't think the bears defend until up here. That's when I think they'll come in and try and defend it.
Yeah, that's the magic number.
Yeah. So, I mean, look, because they were pretty successful here, drove it to a new low. They defended here, it'll set up a break to buy. I don't think we'll see a new low. So, also gold, which has lagged silver dramatically on this 4-hour chart. Kind of looks like
you called the ratio, coach. You called it.
Yeah,
the
it
gold
was a
silver
nice,
ratio.
nice reversal week, and that looks like it's breaking down to me. Here's a 200-day is 83, which is a real big number at 83 because that was a level that held before we went to 96. See this line right here at 83? And that's what where the 200-day will come in down here, and then you have look at these moving averages.
Yeah, convergence.
Here. Yeah,
love
so
convergence.
83 is probably a battleground, but that's a lot lower from here. So gold was lagging, right, because of this. But even gold, if you look at a 4-hour, looks kind of like a ascending triangle. If you just use this fib as a resistance level, we're breaking out, and 1690, 1730 gives you 1770 or so on gold. So metals look pretty good.
Very much.
What about yen here? You were talking about it being that now we're going to get some vacillation. The rally so far, this bounce doesn't look that powerful.
Well, 103, 143.50 was the area I was looking at last week. If we got a bounce off the lows to see a bit of a consolidation range form, and we got to near 103 to 143.50. So the background set, isn't it, that low 141 marker, and now 143.50. You know, if we can't break that, we're potentially going sideways for a bit. CPI tomorrow is going to be very big. US CPI tomorrow is going to be big. That might be a bit of a clincher there. But if we want this rally to continue, we've got to get above there on 144 and hold it. And then this last phase through August, September remains valid, this bullish phase.
Okay. And then why don't we talk a little bit about risk? And, we had this trend line hold last week, pretty good bounce. But I've read, I saw a video with Larry Williams. Blake, you remember him, right? He's a guy, how I turned 10,000 into $1 million. And he's excellent. And he said, as traders, we have to live in the future. We can't live in the past. We're trying to, like Gretzky, skate to where the puck is. And also Newton has some cycles due this week for like a low risk off move. And I don't know where it's going to peak, maybe after a good CPI, benign one. But then I think the next pullback is going to be the ball game. If we put in a higher low and don't take out this trend line into early October, then I think we could challenge this. Looks like a big symmetrical triangle that's beginning to converge. And just from here to here is a 700 handle move. And, if we break out, it would measure new highs back over 42. But I always, you know what I mean?
Yeah, I agree. I'm actually here. Let me go ahead. If you don't mind, I'll grab the charts here. I think that's the argument right now is, and this is one thing that I made sure that I talked about during the week ahead video, is that we are making higher lows, like technically, like across many assets. It's not just that, you got the S&P as you were just pointing out. This is my view of the S&P, just so you guys can see it. But there's your ascending trend line. Yeah. This right here, just so everybody knows, and I'm going to delete this because everybody should already have seen this. We bounced off the 618 retracement. That's what really held the market. But more importantly, it created that higher low. And then, now we're just bouncing right back into resistance. If you remember, okay, so I guess it was last Wednesday night, because that's when I do the trade-off show with Chris Weston. I said, hey, we break 40-20, it's like an elevator up between 40, from 40-20 to 40-90 or 40-90. We got to 40-90 this morning. That's where we're at. I actually just started peeling off some dollar shorts. And for those of you that don't recall, I've been long the cable since down here. I just got out of it this morning because we're like nearing the previous breakout point. And I know the S&P is, it already accomplished what I figured it was going to accomplish. But now that we're here, it's really a strong pivot. And what's going to move us off this area is going to be really, it's all about tomorrow, right? I mean, it's all about inflation. I mean, if inflation comes in way weaker than expected, then we will probably see a continued rally in the S&P. But now that we're here, it's really hard to make that decision because of what's happening tomorrow. And I don't think tomorrow is going to change the trajectory of what the Fed is going to do this next month or the next meeting. It's what it's going to do is it's going to determine how far the Fed is going to go, right? Because the Fed seems hell-bent on raising rates, probably another at least another half a percent. But how far they go after that is probably going to be due to how this CPI data is. What are you guys' thoughts on that? We'll start with
very much.
Ryan, go ahead.
Yeah, very much so. You've been saying it for a while. It's not the increments now. It's where rates are going.
Yeah,
that's a big thing. But I think we're still in a situation where the market is gonna try and test the Fed narrative. If it's a poor number tomorrow, you're going to see yields drop. You're going to see the dollar drop on a soft number because the market's going to second guess the Fed again. And you balance it up. Is the Fed going to change their mind on a mildly softer inflation print?
Yeah, we have to also keep in mind last CPI print came in now marginally below expectations.
Exactly, and we saw the reaction there. We saw the reaction there, and what happened to yield? We're still running at up at 330s, much higher than that print. Dollar yen's running much higher than that print. Okay, euro dollars perhaps found itself a bottom, but the market's going to do the same thing. Soft print tomorrow, dollar sells off, yields drop. What do? Do you bet against Powell in that situation, or get into the FMC?
I think that's how we get the correction is people selling into the Fed. And the Fed delivers. So
getting their ass handed to them again.
Yeah, I don't know if we'll break that low that Blake showed, but
this one right here, the 3,900.
But that long-term uptrend line. I know a lot of people. I think Greg thinks it's going to break it. The next pullback will, should hold above 4,000, Blake, like your little breakout, and we may not top. Maybe we top, like I said, on the benign CPI number tomorrow, but these are just cycles, and two guys I respect. Okay, so I do intelligence gathering. I'm not joking when I bring in these guests and say it's for intelligence gathering. I said to Blake in our interview, keeping an open mind will keep your account open. So I bring these people in for a reason, and they help me with my narratives and what I see technically. And I have an open mind to people whose work I respect, like, everyone on the team. Yeah. And then people I interview. So, it's an advantage to be hearing these people every day.
Absolutely. And you bring in some really, really great guests. And I've learned a lot of that just over the last couple of years that I've been doing more interviews on the Trader Summit side, is that when you talk to a lot of people that are involved in the markets, that you get a lot of different points of view, which is good. Yeah. And it helps you really form how you want to attack the market at that point.
It's like being in a community, Blake, where guys in the chat room come up with an idea and a play that you weren't even thinking about. And you look at it, you think about it, and you go, gosh, I'm glad it's not just me. And there are some sharp guys that give me an edge.
Yeah, and there's like, this is an example of like the chat room of just what people are doing and saying, and what we're trading. Here's an example of trades that are being placed in the market. Not these are by me, but the one that are in green. But you can see the other traders are in our community. So it really gives you a lot of ideas on how to attack the market for sure. So let's discuss the yen here, because the dollar yen is a little weaker today. It seems like people are getting a little nervous about more intervention. Ryan, what's been like your thought there in Europe with your other Europeans regarding the yen? The yen has obviously rolled over from some pretty key levels, but we're also holding some, like, in my opinion, a lot better than I thought we would. But do you have any thoughts on the yen here? I know K-Man's not around this morning. He had some things he had to do, but what are your thoughts?
Yeah, I thought we might get a move down to that 140 area, that decent break point, because I think there's probably going to be a lot of those longs getting nervous if we get back down there. Likely some stops if we bust through it.
Yeah.
But we've said a bit of a point here, that low 140, 150. And as I mentioned to Dale at the start of the show, I was expecting 143, 143.50 to perhaps be a bit of a resistance area. And we see a bit of consolidation. Have we broken the trend? Absolutely not. But whether this is a pause or the start of a decline, it's a lot similar to other times we've been up here and we saw a decline, and look at the 138s, 139s all the way down to 130. We could have a similar situation there, but even that wasn't the end of the trend. But from here, I see potential for a bit of sideways action. Maybe the CPI tomorrow changes that. If we do go a bit sideways, we're going to have to be waiting until we get a catalyst, be that the Fed, Bank of Japan, or whatever. But as I say, to carry on this rally, we need to get back above that 143.50 and more so 144.
Yeah, I was going to say probably right here. If you notice, this is a 618 retracement that actually held. So if you guys are dollar yen bulls and you think that, oh, we need to go higher, this is probably the level that Ryan's just talking about that needs to be broken. Hey, I see Greg Horvat is here. Greg, how are you this morning?
How's your knee, man?
Hey, I'm fine.
Hey, well, good to see you.
Knee is getting better, so nurses did their job. So
Greg likes to go into the hospital, and he's got all these nurses around him. Weirdest thing.
Yeah,
never seen anything.
I can't
like
imagine.
They just kind of all hover around his bedside. Greg, what are your thoughts regarding the yen here and the markets in general? If you have any basic views.
Well, I think that that US dollar index found a temporary top, that we could be headed lower. And my focus will primarily be this week on the euro rally. I think that it can provide more upside. But this gap from yesterday has to be filled first. And as you mentioned, dollar yen, I think the dollar yen is doing quite well here when we compare it with the euro, but it can have something to do with the US yields. The recent turnaround on the US dollar index to the downside hasn't been actually confirmed much by the US yields. They are still holding up quite well. So I think that there will be some pullbacks, and this can allow us to fill this gap on the euro, as I said. So I think that the euro dollar, in my opinion, at least temporary, can be bottoming here. We can also see some very nice five-wave rally from potential, even maybe double bottom on Aussie. You have also 5 waves up on Kiwi from a new low. So I think that these are a lot of interesting setups for this week. But I think that those Mondays, whenever we see some very sharp moves on Mondays, especially after gaps, I think it's very hard to trust them. So I think that there will be some short-term pullbacks.
Yeah, I agree with that. And we, again, tomorrow's a really, really critical day for the market. US CPI is obviously going to be a market mover that we need to be aware of. So I was telling everybody in the chat room, if you guys hear me like pull away from my microphone, we had apparently a mosquito laid some eggs in my dog bowl, which you always get, the water gets changed out so quickly, but I have mosquitoes in my house, just long story short, and I have one buzzing around my head right now, and it's driving me freaking bananas. So if you guys hear me like kind of fade away from time to time, it's because I'm swinging my hands frantically at a mosquito by my head.
Can you ask the mosquito what it thinks about gold?
Yeah, let's talk a little bit about gold. How does that mosquito feel about gold right now? Actually, let's ask better than a mosquito. Let's talk to Stelios. How's Stelios feeling about gold and silver right now as these precious metals break higher? What are your thoughts?
I'm so sad today. No, I'm kidding. It's it's always nice to get to be lucky with the entry, right? But
goodbye.
This
Look at that move in silver.
This is this is a lot on the back of the dollar retreating. We have to say that yields are actually still relatively firm. So that's encouraging, even more encouraging if you're long like me, long precious metals. I mean, not in any other sense. And
I got that. I got it. Huh? That was funny.
Yeah, shoot me now. I know, bad joke. Sorry, Richard.
It's
sorry,
so
guys.
deep.
So yeah, I mean, it's looking good so far. But we were saying on the chat room, really, this is still we're still in shop land basically. We shouldn't. I'm trying to get excited, but I'm not yet. The first real major level that needs to get taken out is that it's around 21. Remember those previous highs, which were 2080 something. So we're some way away. So not quite there yet. We have gone past the 50-day moving average, which is good. But really, the big test is making a new high there. If we pass on a daily close above 2090 or something like that, that's a very good sign. But I'm still a little bit skeptical, even though I really like the trade, obviously. I'm a little bit skeptical because I think there is a chance that inflation is still going to be sticky. The Fed's going to be consistently hawkish, and that's going to be a little, a force lower for metals. Obviously, it's still a short-term force. You have to look at supply and demand. You have to look at the fundamentals, and the fundamentals are that we are still in very, very negative real rates, right? So it's and also from what I'm reading, physical gets drained from COMEX, from everywhere. So when this happens, all the forces are kind of getting together, and really the only obstacle right now is the Fed. Once the Fed turns, which they will, look out. That's what I'm going to say.
Okay, well, you say look out, but gold didn't rally and silver didn't rally when people, thought the Fed's going to, balloon its balance sheet, and so it's, gold and silver are going to go higher because we're obviously going to see inflation, and then we got all this inflation, we had no rally in gold. So what makes you believe that gold and silver and precious metals should rally when the Fed actually becomes more dovish?
Well, look at the last time we had this major leg lower in risk, and then the Fed threw everything at it. 08. When did the real rally start in gold? End of 2010. September 10 is really when the first big leg. I'm looking at silver, but I'm sure gold is the same chart. It's basically, there is a lag. There always is. I don't know why, but it seems to. I was looking at the silver chart actually, and end of 2010. Yeah, there you go. End of 2010. So it's not from what. You can see from the past, it's not the Fed is dovish, they're turning on the QE and cutting rates. It's going to go straight ahead, twice, 3 times higher. No, it doesn't work that way usually. It takes time usually. I remember
these moves. Oh man, a lot of them were happening in Asian trade too, and they were so explosive.
You know, as much as the Fed is tightening, guys, isn't it still negative real rates, even if they get to 4%?
Yeah, I mean,
we're talking about like it's
inflation is right now. Yeah,
it isn't restrictive. Maybe QT will be, but rates aren't yet, are they?
Yeah. That's I mean, you're right. You're right, Dale.
So maybe risk markets continue. I mean, everything, and the Fed has to keep tightening because they don't want that to happen, and then they get to overkill. But that's after the fact. We have these rallies first. Markets kind of test the Fed's resolve and don't break and cooperate with him. It's possible.
Sorry, guys. I got this
mosquito.
Oh my God, it's a big one too. That means it's been bloodsucking.
Do you have any bug spray, bro?
What's that?
Use your karate move and like catch it in your hand.
I'm actually standing here. I'm sitting here in my office and I'm swinging around a fly swatter, which is totally doesn't even work.
Why are you drinking out your dog bowl in the first place?
I'm gonna start knocking over like monitors here in a second. It's crazy. I've gone nuts. So hey, I want to ask your thoughts here on the sterling. And by the way, I guess we should probably mention, obviously if you guys weren't here at the end of last week, the Queen, all of us here in the US, I would say, most people here in the US are really felt it, the loss of the Queen. And obviously we had September 11th, or, the anniversary, yesterday. Very, it's a big day and a sad day for America.
Where were you?
A couple of things that we needed to make sure that we mention. But now that we've talked a little bit about that, let's look at the sterling, and as we're approaching previous resistance, what are you thinking here, Ryan? And with this move in the sterling, a lot of people have been pointing lower levels for a while, but it looks like we are getting a nice bounce.
Yeah, that one, the high 117s, 118 is going to be the kicker. That's almost the 103.40.60 in euro dollar. But it's all part and parcel of the dollar move, right? It goes more speed than perhaps euro dollar. You've only got to look at euro sterling just to get what is really happening with the pound.
Yeah, and we're right up against really critical resistance. Wouldn't you say this 87.25?
87 yet 20 area, can't break it. That sets it up for a decent rejection or a possibility of a break trade. But I just haven't got conviction in being long euro on a break of that one. It's not because the euro is any better than the sterling. It's just the volatility difference between them at the moment.
Sorry, I just had the microphone on mute. Now with this, do you think that we will eventually break this 87 level, 87 and a quarter, yes, really, with the euro sterling?
Yes, absolutely. I still favour the long side longer term. If I'll be looking for getting it back into my longs that I had. If we're going to move down to 84s, 83s, and I was looking at a break trade of 87. I just don't have the conviction for that. I'm actually short some euro sterling just on that 87 level from Friday. See where that goes. But yeah, I may still go with a break if we get a reasonable break of that 87.20 area. Yeah, I may just have to scratch the itch if you catch my drift.
Yeah, no, that's a big one. All right. So very good. Well, we're about a minute away from Dale. You have an interview that is coming up. I just want to say, I'm going to mention this. I mentioned this on the week ahead video. We will be raising our prices with ForexAnalytix quite substantially at the end of this month. So just letting you guys know, we haven't raised our prices in 4 years. And so we are, for those people that are, ForexAnalytix subscribers, just realize that we've always grandfathered your prices in. So we have people that are in at very low prices since our existence, and that's going to continue to happen. But we wanted to mention that we will be having a price increase here in the next few weeks. So I want you guys to all think about that as you have we will have pricing specials here in the next week or two, but this is a great time to take advantage of the, try out ForexAnalytix for $1. See what we're all about before, we do start making our price increases. So I wanted to mention that just because I did talk about it on the week ahead video. And I want to thank everybody for being here. And oh, did I kill that mosquito? Did I get him? No, I didn't. Okay, I thought I did. I want to thank everybody for being here today. Dale, I hope you have a great interview. Ryan,
thanks, Blake.
Steve, Stelios, and I know K-Man was out. Thanks, Gregor, for being here today.
Cheers, guys.
Just one thing, Blake.
Thanks, everybody.
Hey, Stel team, thank you very much. Great start to the week. Just one thing that I thought of when you were talking about, people being grandfathered in, is that that means people stick around and they remain here for years. And the message to me would be, in our industry where there's very high turnover, because everyone can have drawdowns and go through difficult periods, but when people stick with a service for years, you guys figure out why. Anyway, Jerry, great to have you back on F.A.C.E. Jerry, I'm trying to move you to panelist. See if I could do it now. Someone may give me controls of the TV set. There's Jerry moving over now. Jerry, welcome back.
Great to be here. Are you able to hear me now?
Got you, Jerry.
All right, great, Dale. Thanks for the invite back.
Yeah, and you had some interesting thoughts last time we were together. If you want to share the screen, you know where it's at the bottom. Jerry's company and Twitter handle is at FTM.
FTM Daily.
Daily, okay. And that stands for?
That stands for Follow the Money Daily. The website being followthemoney.com.
Okay, so you do some money flow work to give you cues on, where the volume and when there's accumulation or distribution on individual issues.
Exactly. Yeah, we spend quite a bit of time focused upon helping people understand trends in particular. Trends are something that I think are very, very helpful, especially for newer traders when they're getting started.
Yes. Yeah. Someone commented, what a great handle to have. You must have gotten it a long time ago. Follow the money. Yeah.
Well, the handle is FTM Daily.
Yeah.
Follow the money was taken, but followthemoney.com. Yeah, we did luck out with that one.
Yeah. Okay. So tell us, the big question really is, after that big rally from mid to late June, S&P's rallied to above 4,300, sold off to 3,900, recent bounce. Was that rally to 4,300 the beginning of something, or was it just another bear market rally and the resumption of the bear is underway?
Okay, yeah. So what I would say here is what we've been explaining to our members here at Follow the Money has been that we've just really been locked in a really obvious downtrend. I mean, you can clearly see it on the charts here. That color may not be really great. Let me see if I can get a different color there. Black.
I like that line.
Yeah,
because there's actually a line for off the lows in June and July that came in at 39, right where we held at 61.8. And it gives it the look. I'm talking about the uptrend line from the June lows.
Oh, sure. Yeah, this one that's coming right in here even.
Yeah, it held pretty much, spiked underneath it, but, trend lines are like mattresses, so not concrete, right?
Exactly.
So if you look at that with your downtrend line, it's almost like a huge triangle to me.
It looks like a triangle, quite frankly. It sure does. And
like
it
a symmetrical compressing.
Yeah, that's right. Exactly. It looks like a symmetrical triangle. And the only reason I don't want to emphasize that too heavily is because that might give us hope that we're going to get out of this pretty easily. And I don't know how easily we get out of it. Now, tomorrow, Tuesday, we're going to get a big inflation report. And I think a lot of what's, of course, driving the fear, the panic that we've seen pretty much all year long is the idea that, we are in a recession or inevitably going to go into a recession at some point. Some people saying we already are. Some people say we're going to hit it next year. One of the things I've learned over the last many, many years of investing and trading, I traded my very first stock in 1996, I traded my first option in 2002. I bought my first cryptocurrency in 2012, and I've seen all these different markets. And I've lived through some times of panic. When I first got started, Dale, you can probably relate to this, but when I first got started back in the 90s, I lived through the dot-com bubble, and I felt invincible. In fact, many people who got into the stock market in 2021 probably felt the same way. There was a lot of new investors that came in. We saw them come in to followthemoney.com. You probably saw new investors at ForexAnalytix, and many people wanted to learn. But all they saw was this rip-roaring rally. And so back in the 90s, I lived through that dot-com bubble. I thought I was a genius making money. And then, of course, when the bust came, the dot-com collapse, dot-com bubble finally bust, one of the biggest mistakes I made was not to take advantage of the blowout. Instead of being able to pick up shares of Amazon at $15, instead of buying shares of Microsoft, really high quality companies for my long-term portfolio, taking advantage of that, I was fearful, I was scared, I was worried, I was concerned. I bought into the narrative that it'll always go down, right? And we know from trends that that's not true. I mean, things go up, things go down, that's what happens to the market. So right now, we're in a really strange place historically. And what I mean by that is it's not that unusual, but it is a little strange and odd compared to where we have been lately, because let me get back to my mouse.
The Fed makes it strange.
Well, of course, the Fed has certainly made it strange. But when you look at the time frames, for example, here, you'll notice that the S&P on the swing trend, the position trend, and the long-term trend. Yeah, just totally sideways. Now, trendless markets are pretty common, but not across all time frames. And that kind of builds the case of what you were saying. We are in this symmetrical triangle, and it really is indecision. So anything could kind of happen here. That 200-day moving average overhead, that certainly, we failed at it twice, once in April and then once again in August. If we retake that, that's going to be fairly meaningful, especially if it comes on higher than normal volume. And that inflation report that comes out on Tuesday is going to be parsed by policymakers and traders, looking for, the speed of the disinflation. How quick is the inflation going down? And then they're going to extrapolate.
So you're expecting a benign number, Jerry?
I think it's going to possibly be better than what some people are expecting. We've seen a tremendous decrease in gas. We've seen a tremendous decrease even in rent prices, not coming down, but the pace of increases have really decelerated over the last month, and several other things as well. There's been many markets that have seen, a pretty decent pullback. Even many of the commodities, much of the commodities complex has been hammered. So all those input costs inevitably lead to the cost of goods and services, and especially goods. And so we would expect that if that number comes in a little better than expected, it's really going to push the narrative that the Fed is going to have to not take rates as high as they may want to, and they're going to have to turn around and pivot at some point. Now, if you look at the Fed futures market, you'll see that the Wall Street expects the rate cuts to begin in Q3 of 2022. Now, how realistic that is, I don't know. But that's currently the anticipation. And if they move the needle on that with that inflation report and push it back, say, to Q2 because it comes in better than expected, that could lead to a repricing of risk.
You mean 2023, right?
2023. Sorry. Yeah, correct. Yeah. That's an important distinction. Thank you for. Okay. But Q3 2023 is the current expectation of when those rates begin to come back down. Yeah. We're of the opinion. And I don't put too much stock in opinion, so I'll say that up front. This is my two cents worth here. But we're of the opinion we much prefer data and trends. But my opinion is that we cannot get above much more than 4% interest rate.
10-year.
I'm mainly talking about that Fed funds rate. I really can't see it getting above much more than 4%. For a multitude of reasons, but predominantly.
Could we service debt? I mean, what's going to be the interest costs on the large amount of new debt that we've taken on since COVID?
Right.
Let alone all the other legacy programs.
Exactly. You make the case there. That's the problem. And when you go back for say 30 years, Dale, the average Fed funds rate is 5.67%. You know, that's okay. But right now, if we were to go to if we just went back to the average, you know, a 30-year average of the Fed funds rate, we'd probably collapse the economy even more. So I would say the 4% range is really what the Fed's been targeting. They've certainly been kind of forecasting, but of course, many expect that the rates are going to have to go much, much, much higher. Yeah. I'm not of that opinion for two reasons. A, I don't think we're going to need it. B, I'm also of the opinion that they don't have the ability to do it because of the debt servicing issue you mentioned.
Okay, I wanted to ask you, a lot has changed possibly in the dollar and more markedly in gold and silver. And I noticed you had Bitcoin and silver up there. What do you think's behind this silver move? A lot of people at bottom go, well, I don't believe it. It's another bear market rally. You know, I've seen this before, and you know, I still don't like it. And gold, all the disappointment of the gold longs not being rewarded with high inflation happening, and now we're on the cusp of the numbers getting better. You getting any kind of message from what's happening with silver?
Well,
outperforming gold.
Yeah, I mean, if you look at the silver gold ratio, it's really extended. You know, we were about 96 or 97 just a couple of weeks ago, and in fact,
that was halfway back from the highs and the recent lows.
Right, and in fact, I have another chart here that I want to pull up because it really speaks to what you're saying. It shows the extreme. Let's see, let me pull this over here.
Bearish sentiment.
Yes, incredible.
You're telling people to buy physical. I think that's a good idea.
Yeah, we like.
It was better last week, but you probably had this up for a few weeks.
Yes, this came out on this particular chart came out, and we put this out every weekend. This is our report we put out on the weekend. It has all the different charts. This particular chart, though, I put out on Twitter on our handle FTM Daily for those who want to follow us there. But this is the silver ETF, and it doesn't matter if you use a silver ETF or physical silver. In fact, you know, we could use any of them. But you'll see that when you look at a ratio between silver and the S&P, it's trading at the lowest level since 2006, despite the fact that silver, you know, is well above where it was back during those times. So the silver ETF SLV has never traded lower versus the S&P during its existence. And if you look at a chart of, say, physical silver, it looks very similar. So the sentiment here.
Do you have that chart to show the comparison?
Yeah.
Silver to S&P. We're seeing the physical silver chart right now.
Oh yeah, let me see. There's the. Oh, you're not seeing the new one that I just put up, are you?
No.
Let me see. Let me put it in here. There we go. I didn't realize. Can you see that now?
Okay. Oh wow.
Okay. Yeah, there we go. So there's the chart. You know, this is the silver ETF SLV, the most liquid one that's out there. I mean, it's not my favorite ETF, but it's the most liquid one, largest. And it's trading near its lowest level. In fact, practically at its lowest level since it began versus the S&P. Wow. And that really speaks to where we are, even with the S&P down, with inflation at these current levels. Look, I own physical silver for the long term. I do believe that it's a valuable asset that is necessary, required for the solar boom, for the EV boom. And there's many industrial applications for silver, but it sure has taken it on the nose in this inflationary time. You know, people who were concerned about inflation bought gold and silver. And when you look at, say, something like gold, even here's a chart of gold. You know, we see that same downtrend intact, long-term downtrend, position downtrend. And then we look back on the chart, Dale, and we see that back here in February and March, right here where this red zone is, you'll see there was a lot of buying, and that came on big volume. So assuming we're able to get back above 1875 resistance in the near term, we're just going to have a wall of resistance here from people who may have buyer's remorse, who bought it in this run up, and they're going to be wanting to unload it for, break even. So
they should hold it for 2,500.
Yeah, I'm of the opinion that gold and silver go higher long term. Absolutely.
I know silver is going to outperform, but I don't think silver is going to go to $38 without gold moving. So
right.
But you're right, and you know what? Look at the miners. And that was a great chart of the silver compared to the S&P. That looks like the low was 20 in 2018. So we've had about a 4-year base, and the expression that Louise Yamada stole from me: the bigger the base, the bigger the launch into space. That's a hell of a base.
It is
saucer bottom here.
Absolutely. Yeah, absolutely. So there is a lot going on with those two markets, but the sentiment here, the bouncing off of the 1750 lows, this is the area we watch. But the other thing to watch, interestingly, on silver is the 30 SMA. We've been tracking that for a few years, and it reacts interestingly to the 30 in particular. And so we follow that one. And right now we're hovering
1940.
Yeah, about 1940, and we're hovering right below it. And it's going to be a similar situation to gold. The February and March buyers really pushed it up on some anticipation. I think there was also a silver squeeze thing going on at the time. So get a lot of buyers here up to about 26, 27 that are probably going to want to take some, get out, break even when they get there. So expect pressure all the way up until we get to new highs.
The other crowded trade was long dollar positions and short euro positions, two of the most crowded trades on the board, based on commitment of traders, based on sentiment indicators. What's your view?
So the dollar we have been long on for some time. We actually do, we actually rank about 150 plus ETFs. And let me go down to that chart or that table, because I want to show you that. UUP has been, there it is. And so here's our ETF leaderboard, what we call our ETF leaderboard. And you can see that Turkey's at the very top. This is for position traders.
Wow.
Turkey's at the top. Ironically, they're running at about 80%.
With their currency collapsing, their market's exploding.
Right. Exactly.
Okay.
Just kind of like what we had here back in March of 2020, So, but Turkey's dealing with an 80% inflation rate. They just cut rates by 1%, shocking the market with 80% inflation. Their market has really outperformed over the last few weeks. The dollar has been in the top 3, pretty much at number 1 for the last many months. So we've been pointing at the US dollar for our members. And then you can see other areas we like right now continue to be things like solar energy and clean energy, uranium. Thanks to the Inflation Reduction Act, there's going to be a lot of tax credits going towards those markets, and we're already seeing analysts begin to upgrade solar stocks that they had left for dead. Goldman Sachs, for example, just upgraded First Solar, for example. In fact, I think I have some solar charts or some solar rankings I'll show you here.
And uranium's interesting. Did that pop into your screen before Japan said they were going to move back towards it? That was kind of important news. Uranium got.
Yeah, uranium has been in the top 10 now for a little bit. We use several different indicators and a proprietary system to kind of bring that together and rank these things to keep our members focused on the right, on the leading markets. And yeah, uranium has been there. We think there's plenty more upside, although there's so many different places to invest with uranium. I'm just kind of old school. I just like Cameco, to me, Cameco, or a uranium ETF. I know there's a lot of guys who like to get in, really down deep and focus on some of the small caps. I find that to be a little risky for my taste, but the more you research, I'm sure you can make plenty of money there.
Okay. You do a lot of work, Jerry.
Yeah, we've done a lot of work here. Let me see. I'm looking at yes, like for example, we were mentioning solar. I mean, solar right now is on this trajectory where we're going to see we've already had a record. We're already heading for a record year in 2022 for U.S. rooftop solar installations. But there's so many companies that are going to benefit from that over the next, several years, all the way out to 2030. In-phase, First Solar, for example, I just mentioned, they just got a double upgrade from Goldman Sachs. They lifted their price target from 60 to 172. That was quite an upgrade and quite a repricing of its price target. Sunrun is another stock that company actually focuses on rooftop solar. They're very aggressive. So I think there's a lot of opportunity in clean energy as well.
Okay. Nat gas, you have a view there with the
natural
winter
gas
coming in Europe. I saw news today that Germany said they're 90% ready with reserves to go this winter. I don't know how they got to, we're going to freeze to death to they have plenty of reserves now. You following that European part of this story?
I have. They did. They're going to outline some concrete measures to address the crisis. The crisis over in Europe is outrageous. We have members over in Europe here at Follow the Money, and we've gotten some really bad stories. Some people just showing us their utility bills. The utility bills over there are just crippling for businesses and even for residential customers. You have the price of natural gas, while here it just hit $10 for the first time since 2008. Over there in Europe, it's 10 times higher than it is here, and really no sign of relief. Now, you did mention those details, how Germany is working it out. One of the biggest problems I think about the natural gas issue, Dale, one of the saddest problems, is that Iran is the second largest producer of natural gas, and they have the ability to take care of Europe's energy crisis. But the world has been so focused, and this is my opinion now, and people may have opinions that differ from mine, of course, but we have been so focused here in the West on propping up regimes like Saudi Arabia and vilifying regimes like Iran that, we have kind of created some of these problems on our own. Iran is willing to help with Europe. It's willing to help with, help with this current crisis. It has the means to do it. We just haven't built out the pipelines. In fact, every time Iran tried to build out a pipeline to get its stuff over to Europe, Saudi Arabia would throw a hissy fit. And so we would have this problem, and and in fact, part of the wars in Afghanistan and Iraq can be directly related to preventing Iran from getting its natural gas and oil into the global mix. And so
do you really think that, let's say, for example, the treaty happens and the West changes its attitude, that Iran, which is very closely aligned with Russia and China, would bail out Europe?
Well, I think that they wouldn't be able to now because the infrastructure isn't even there. I mean, the pipelines have to be built. The shipping terminals would have to be, put in. So, I mean, literally, this is exactly the problem, is that these things could have been addressed earlier, and they could have been dealt with. It's tragic. Exactly. It's the same thing with renewable energy. Many people don't like renewable energy for political reasons or for practical reasons or whatever. But when you think about it, Dale, we could have really empowered ourselves, many decades ago. We've had this technology for a long time, but the big oil complex likes things the way they are. They like things the way they are, and they don't want to rock the boat. And
well, heck, Jerry, even the disease is partisan.
Right, exactly.
In our world. I mean, the first time in history, first time in history, I have the flu. Well, you must be a Democrat if you have the flu, or you must be a Republican. I have pneumonia. Well, are you come from a red state or a blue state? It's just ridiculous. I agree with you.
It's enough to drive you mad. It's enough to drive you mad.
Makes you really want to keep paying taxes, doesn't it?
So true.
Yeah. So, wow, you do so much work, Jerry. I mean, you're really comprehensive. And I don't know, we're moving into fall, summer's ending here. Kind of give us your view, because, these interviews are kind of spaced out, of, what you're imagining, like Wayne Gretzky, he goes to where the puck is.
Right.
Larry Williams says, as traders, we need to live in the future too, and not just, kind of look at where we think things are going to be in the months ahead. What's your gut instinct with all the research you do? There's still that trader investor intuition. What's it telling you going into the next 3-4 months?
Sure. Without a crystal ball, of course. If I have one, it's broken. But let's just say that I did. I mean, if we were looking forward, if I use that intuition and say, what do I think is going to happen by, say, year's end?
Yeah,
I'm of the belief that we have spent so much time. I think most people have spent so much time on microeconomics, and they haven't focused upon the macro. So when inflation came, most people didn't even know what it was. Whenever we were dealing with some of these issues, so many people, I think, in the West are kind of economically deficient. Illiterate. Yeah, for the lack of a better word, illiterate. And because of that, I think it led to max pessimism very quickly. 2022 has been a year for the record books. I mean, the pace at which we saw the deceleration of the stock market trend and all of this, it was just incredible. We've seen stocks, have 80% drawdowns that are considered to be, big companies on major exchanges.
They were a place. I remember people calling things like Amazon their flight to safety trade.
Right. Exactly. So
Crash.
Right. And I think this is just my opinion of where things could go. I think we have seen too much pessimism because what happened here, Dale, was in 2020, we should have had a recession. Okay. We should have had a recession in 2020, but it was an election year, Dale. And so because it was an election year, they broke out all the Band-Aids, they propped up everything, they broke out the duct tape, and they kept that thing together, and they pushed it up. We should have known what was going to happen. And there's a lag factor in economics. And so the Fed now is bringing the medicine. The market has certainly come back down. I'm of the opinion that we have seen max pessimism in the United States, and that from here, it goes from bad to less bad. And when you go from bad to less bad, there's a lot of money that can be made. So I would expect that the S&P will likely have a Q4 rally, maybe not up to brand new highs, but certainly bringing us out of that really bad state to a less bad state, at least in terms of the S&P 500. That would be my expectation. So for me personally, I continue to dollar cost average into the most highest quality companies, because I like this opportunity to add on a very sizable, sell-off. There's a lot of great companies out there for the long term that I think will outlast the United States government, and I want to own those for the long term.
Okay, Jerry, laying it on the line for you guys, Jerry Robinson. So minimum follow him, and best way for people to get a hold of you and stay in touch with your research and your great work, Jerry.
Yeah, thank you. Sure, they can follow us on Twitter. I'd love to talk to them there. The handle is @FTM Daily. And then if you want to go to our website, you can go to followthemoney.com. We have a free podcast, free newsletter, all that stuff. Feel free to sign up for that right there on our website. And I really appreciate the work you do here, Dale. I was excited to be invited back because I know you guys do great work, and I really appreciate the invite.
Well, stay excited because we'll talk again this winter.
Great. Look forward to it.
Jerry, my trading warrior brother, Jerry Robinson, everybody.
God bless you, Dale.
Thank you. Back at you, and thanks for sharing your excellent work with us today, Jerry, edifying the community. We appreciate it, and you. All right, guys. So that's a wrap. Follow Jerry. He gave what a line that these companies will outlast the US government. That caught everyone's attention, Jerry. So that's pretty long term. Well, maybe short term. Anyway, guys, could join the team in 15 minutes on the Morning Edge. See everyone for Turnaround Tuesday. And the only reason I showed my use a video camera is that my hair is becoming fashionable in the markets. So have a great day. Hi-yo silver, and I'll see you guys tomorrow. Don't just count your pips, count your